the Fed hike? That's the big question. Everyone, welcome to your weekly Carson's Glass Half Full. Ryan and Sonu here as always. Sonu, I'll set the stage and turn it to you. Kevin Warsh has taken over at the Fed. He had his first Fed meeting on Wednesday, June 17th. We're going to break it down, kind of what was said. But it's interesting, you and I were talking before we record. At the start of this year, the question wasn't like if there'd be a hike. The question was, how many cuts will we see? You always kind of pushed back against that. Now the narrative is, oh my, could the Fed cut like in a meeting or two? Take it away, Sonu. What did you think about what Warsh had to say, the market's reaction, all that stuff to Kevin Warsh's first Fed meeting?
Well, I guess it started that the markets are, end of the day negative, but we see 1% drop all the time. We've always talked about that, so it's par for the course, right? But there's always something maybe useful that comes out of, what is the instant reaction post Fed meeting, right? Because tomorrow something else will happen. AI will be in the news again, and we'll move on, right? But the first reaction is always interesting. Look, starting at the top, right? There's always some uncertainty around a new Fed chair and how they'll handle communication of monetary policy. We know that. Now, of course, policy is not determined by one person. It's not determined by a chair. There are 12 members of the committee. There's actually 19 members on the Fed, but only 12 of them vote in any particular meeting. But the chair is important, right? Because they're the ones who communicate how, what's the thinking and what's the analysis behind any decision, explaining, policy decision-making and scenario analysis too, right? Think of it this way, like we manage portfolios. The Fed is also managing risk, the risk of rising unemployment and or the risk of higher inflation, right? That's not easy, just like managing portfolios, but markets need some confidence that the Fed can do that. That matters especially, it doesn't matter when, in bull markets, for example, throw a dart, everything goes up. Right? It's hard to go wrong. Similarly, right now, maybe there's an AI wave, that's okay. But if there's a shock, we need to know the Fed has our back. We need to know how the Fed will react. And we had a sense of that, which is not to say the Fed gets everything right. No, they don't, right? We know that back in 2022, they should have probably raised rates sooner rather than later.
Right, exactly.
But, I think with Warsh, what he's done, he's just disengaged from all of that. He's refusing to engage at all with, what you and I would think is traditional communication that we would expect from a Fed chair. Now, he said, there's not going to be forward guidance. He's never been a fan of that, which is okay, fine. We don't need to know what policy will be in 2027 and 2028. But we need to know how you're thinking about, policy under different scenarios. We need to know what your reaction function is, right? So instead of that, Warsh is creating a bunch of task forces, and you and I know when the government says they're going to create a blue ribbon commission, we know what comes.
Run the other way.
Yes, and he's creating 5 of them, not just one. He's creating 5 of them. But case in point is the statement. Usually we use to the Fed statement, and it's very minimal changes from one statement to the next. Every 6 weeks, the Fed has a meeting. Statement.
So we'll put the statement up right now on the screens. Let's put that statement up right now. Yeah.
And usually some members of the press, go through the statement. They, strike out what's changed. This statement, relative to the last one, almost everything was stricken out.
It's one big eraser is what it looks like here. Yeah.
So I haven't counted anything. So maybe I should have done this. Should put it into AI. It said count how many words are in the previous statement. Whereas this one, it's gone from, let's say, about 200 words to about 25 words. I'm exaggerating here, but that's essentially the gist of it. They've just said, we've kept rates unchanged. We're going to keep the balance sheet where it is. The economy is okay. It's expanding at a solid pace. Inflation remains elevated relative to the committee's 2% goal, and in part reflecting supply shocks. And that's it.
Yeah. Let me jump in here. So, Warsh, it's not a secret. He said he wanted to do some of these things, right? Have, you and I half joke, like when the Fed is allowed to speak, there's something called the Fed quiet period, which is a couple weeks before a Fed meeting. Yeah. But other than that, it's like free for all. Like all these different Fed members are on podcasts. But we've tried to get some Fed members on our podcast. I'm still mad he said no. But nonetheless, they do go on podcasts, and they're on CNBC, and they're on Fox Business, they're on Bloomberg, they're all these places. And they're giving all these opinions. And it's like, there's a lot of different mouths out there talking. And I do kind of, I guess, appreciate maybe to have one universal voice? Is that what he's trying to do? Will we still see different Fed members out there talking, Sonu? Is he trying to rein that in? That's the impression I get. How do you see it?
That's such an important point because that's where the problem lies. Previously, we had all these Fed members, but we knew Powell is who counts. When Powell speaks, that's who we pay attention to.
True.
Because he coordinates policy across. Right now, it's a case where Kevin Warsh is saying, I'm not going to say anything. He didn't even put a dot in the Fed. Every 3 months, they come out with something called the Summary of Economic Projections. Their projection for, what they expect policy rates to be for the rest of the year, next year, core inflation, unemployment rate, GDP growth, all of that, right? And all the members put what we call a dot. That's why it's called the dot plot.
Yep.
Kevin Warsh refused to put a dot in this. So he's just completely disengaged. He's like, so he's not going to talk, which means, but the rest of them will still continue talking. And now there's no leader to guide policy, to tell us, whose voice counts. Previously, the Fed chair's voice obviously counts. But the Fed chair is sort of taking himself out of the equation here, which means we'll be like, oh, this Fed governor is speaking tomorrow. Maybe that's what we should follow. She said something that about one inflation metric. Somebody else talks about another inflation metric. So every time we get a new data point, everyone's eyes sort of go over there. Right? It's running from one point to another data point to another point. Look, there's always uncertainty around data points, to be clear. But there was less uncertainty about the Fed's reaction function. Now you've expanded, yes, there's uncertainty about economic data, obviously, but now you have uncertainty around, what's the Fed going to do?
Yeah. Right? So let's do that. You mentioned eyes going all over. I think eyes are glazing over as we keep talking about the Fed here. Let's get to how this matters to everybody. Is the Fed going to hike? I mean, that's the bottom line, right? They were supposed to cut start of the year. Most people expected. You kind of push back against that. And now with inflation running a little bit hotter, with different things taking place, the Fed funds futures, what the market kind of is predicting. Well, you just mentioned the dot plots. There's much more of a hawkish looking Fed than we had just 3 months ago. Are we seeing a hike, Sonu? That's the big question. Sometime before this year is over, so I'm asking.
I'll start with our views, right? I think we should, we obviously manage portfolios. So our views, I don't think the Fed's going to hike.
Yep.
And now then let's talk about the Fed's views, right? Yep. Now it's 19 members. One member, the most important member, has taken himself off the table. So the rest, 18, well, half of them thinks we're going to get a rate hike this year. The other half not. So we're literally 50-50. Then let's talk about markets. Markets expect one hike by the end of the year and 50% probability of another hike. Yesterday, prior to when we're recording this on the 7th, on the day of the Fed meeting, so the day prior to the Fed meeting, markets are pricing in one hike.
Right.
There was no 50% chance of a second hike. But I think the more important thing was actually what happened at July expectations. July is just a month away, 6 weeks from now. Before the meeting, markets are thinking, there's just a 10% probability of a hike. That rose to almost 40%, Ryan.
Wow.
After the meeting. 40% doesn't mean it still means the base expectation is no hike, but 40% is close to a coin flip. October, the probability of a hike before the meeting is about, let's say, about 25-30%. Again, not huge. Now it's almost 100%. Wow. But then you go back to what Fed members expect. Only 9 of them, half of them, expect a rate hike. So you can see where all this uncertainty lies, right? Now, as I said, I don't think they'll hike. Because you take 9 members who don't think there should be a hike given the elevated inflation picture, plus Warsh, who presumably doesn't want to hike rates. I think he was brought in not to cut rates, not to hike rates. But, I was joking with someone. I was saying he's got plausible deniability now, right? Because even if the Fed ends up hiking and it's 12 members who vote, he can be outvoted. But he can say, you know what? It wasn't me. I didn't do it.
Yeah. A great philosopher, Shaggy, I believe, said that, right? It wasn't me. I believe that's what it was.
Exactly.
So let's see here. So a couple other just things as we kind of wrap this up. New leadership at the Fed. We've talked before. You can have volatility. Markets can potentially test a new Fed chairperson. Going back since World War II, within the first 3 months on average, S&P's down like 13% peak to trough. On average. Now, that's, again, some have been more, some have been less. Skewed by 87. Greenspan took over. Market crashed soon after. Last couple of Fed members, or Fed chairs, markets did just fine within the first 3 months. So there's just some things to think about. But when you look, Sonu, going back 50 years, right, on the first day of the first Fed, well, how do I put this? The first Fed meeting with a new Fed chair, 5 times in a row now, the S&P's been down. Now, you could argue a small sample size. You can argue it's random. I'm not going to totally disagree with that. But we've seen this before. And honest to goodness, I've done this for a while. You've done this for a while. Fed days can be kind of wild, whether it be up or down. And I'll tell you, it's that next day when everybody has a little bit of time to sleep on it and think about things. What happens that next day if yields continue to move higher? I guess we'll call it on Thursday. If the market kind of continues to sell off and the expectations for more hikes come, we'll reevaluate what that means at the time. I think it could be a little knee-jerk reaction. I like to think, that 40% chance you're talking about in October or no, July. In July, feels way too high to me. But hey, what do I know? I'm not one of the 19 people on that thing. But that's why, again, when we talk about models, markets don't care about markets care what we're talking about. What markets care about is what's priced in, right? Mm-hmm. We'd say the market's probably pricing in a little bit more hawkish Fed going forward than what's going to happen, right? If the Fed doesn't hike, like we don't think they will, that's more of a dovish Fed than being priced in, and that's probably still going to be a positive. So we've gone, gee whiz, almost 10 minutes talking about the Fed. I'm about to poke my own eyeballs out. How do you want to finish this?
Look, there's always uncertainty in markets. I think with the new Fed chair, we probably have a little more than any of us want. But, these things happen. You look at the economic data, like you said, what's priced in versus what's not priced in. At the beginning of the year, markets were probably a little too dovish. We were on the other side of that.
Yep.
Right now, markets are a little too hawkish. We are on the other side of that. And I would argue that's, as long as Fed policy evolves how we think it evolves, as opposed to how markets think it evolves, I think that's good for stocks.
Mm-hmm. Yeah. I mean, listen, hey, still having a pretty good year. Last I checked, right? I mean, I know, hey, we're not, can't go up every day, have some down days, but we're having a really good start to this year. And like you mentioned, the economy, we've seen some better services data, some better manufacturing data. The labor market continues to improve. Earnings just had a blowout earnings season, strong profit margins, strong earnings. I mean, things aren't perfect. The housing market, there's some issues there. Consumers are still kind of beat up a little bit, still spending, but not perfect.
But we just got retail sales, Ryan. Retail sales over the last 3 months, March, April, May, running at almost 13% annualized pace. Now, a lot of that is inflation, to be clear. Yeah. And a lot of that things like gas stations. But even if you take that volatile stuff out, the core retail sales up close to 9%. Annualized over the last 3 months.
And that's again, that's hey, you could argue, and this is our argument, second half of the year, economy looks pretty good, and maybe going to even get a little bit better going forward, which again, good news should be good news. But again, it's not perfect out there. We understand there's some cracks and some flaws and some issues, but overall on the aggregate, there's still way more positives than negatives in our opinion. So with all of that, I think it's time to wrap up the latest glass half full. Will the Fed hike? As of now, we're still going to say there's probably going to be no hikes this year. They're probably just on pause. But hey, that's why we do these every single week. If things change, we'll be here to talk about it. See everybody then. Take care. Thank you.